In this video, we'll talk about some news that have happened in the crypto industry over the past week or two. So let's get right into it with Polygon 2.0 announcement. They announced the upgrade, and there is some reference or intertextuality with Ethereum 2.0 upgrade. And you can think of it as there are two philosophies when you basically launch a product, and then over the years you try to tune it in to what is actually needed by adding complexity on top of that. So Polygon started off as a sidechain, or I don't even know what it was initially, and then it kind of announced its ZK EVM quite recently as well, while there was a huge basically boom in all of them when so many got launched, like Scroll and ZK Sync Era and all of that. And now they are announcing its 2.0 upgrade, which is basically, as they are saying in their words, it's a value layer of the internet. What they're trying to do in this layer 2 is basically create a bunch of layer 2s together, which are all based on ZK, so ZK rollups, but all created by Polygon, and then connect them by some interoperable layer. So it's like the idea of the L2 stays, but they're all done by Polygon, so the communication between them is much easier. So in a way, it's supposed to be a seamless, perfect solution that would increase the scalability. By doing this many steps and many changes to the protocol, it is kind of similar to how Ethereum is working, basically, because they initially started off as some just Ethereum, proof of work Ethereum. And yeah, it feels such a long time ago, but anyways, Ethereum used to be proof of work, then it had so many changes and layer 2s, and then new roadmap, and a lot of changes, basically, right? And Polygon is going in a similar direction by going into different changes by what the trend is. The other philosophy, so to say, can be that you just launch a product and you try to not change it at all, because like Bitcoin, so it's a completely different way of looking at things, because you have just one robust thing. It might be not the most efficient or up-to-date by technology, but it is robust and it works and it's simple. And simplicity is often also valued quite highly. The market will decide what is better, what we need, simplicity or complexity like this, because it does sound like a very smart and very thoughtful solution that took a lot of time and effort to make, and it seems like it could solve the issue. However, sometimes simplicity may win over the complexity because, there are more ways you can mess up when something is very complex. And sometimes some elegant and simple solutions may win over the long run. Speaking of layer 2s, Binance announced its layer 2 solution for the BNB chain based on optimistic rollup. I wouldn't say it was the obvious thing that was supposed to happen, because BNB already had 2 KTPS and the transaction fees were quite low comparatively to some other chains. However, whether they are trying to hop on the trend for layer 2s or whether they are actually in need of some layer 2 solution, we don't know. Anyways, they announced the testnet, so we'll see where it goes, and maybe it is a very good sign. Anyways, development is always a good sign. Speaking of Binance, the exchange as well as Coinbase both received a lawsuit. They were sued by the SEC, the word that everybody likes very much. It was coming for 30 days because they received a warning in advance that this was going to happen. And the SEC said that they were violating some securities laws that were established in the US, even though those securities laws were not that obvious. The biggest hit was, of course, on the coins and tokens that were rated as securities by the SEC, and those include BNB, ADA, and Matic. So yeah, suffered the most, but again, what coin has not suffered? The SEC also aimed to freeze Binance assets, and its subsidiary in the US, so Binance US, suffered quite a bit of pressure from people withdrawing the coins and money from the exchange. However, it actually encouraged people to do that to protect their assets. But spoiler alert, they were not able, SEC was not able to freeze the assets because the judge refused that proposal. Net outflows on the Ethereum blockchain from Binance totaled about $2 billion, and the Bitcoin withdrawals exceeded deposits by about $838 million. So there's almost $3 billion of withdrawal pressure, and that's a lot. However, it's good to see that Binance is holding so well under this kind of withdrawal pressure. And However, it is now facing some problems in other countries as well, because the US still has influence on a lot of the countries, unsurprisingly, as much as we can talk about BRICS and China overflow and China's influence over other countries. France has some problems with Binance. The Netherlands refused to give it a license, so Binance is ceasing its operations in the Netherlands. The UK also had some problems with Binance, so a lot of stuff has happened. However, I'm sure Binance will have some more opportunities in other markets. And speaking of Asia, Hong Kong introduced its first tokenized bonds, and they were green bonds for some ecological stuff to increase investments into that thing. It was about $100 million, so it's not too much in the country sizes, but it's still a large sum of money. And they were tokenized bonds, as I said, tokenized, not on any normal NFT type of thing. It was a private blockchain. It's actually a very good sign that something from the outside and something as big as the government is coming in to use the blockchain and the tokenization of their assets. And by the way, speaking of the outside, Blackrock, the biggest asset manager in the world, announced that, it didn't really announce, but everybody knew that it filed for a Bitcoin ETF and is going to run it by the SEC. And if it's all good, it will be run on the exchange iShares. Majority, like 99.9% of all ETFs proposed by Blackrock are approved by the SEC. So I have very positive feeling about this. And this will mean very good things if it is approved. First of all, it will bring liquidity to Bitcoin. Second of all, it will increase the interest of everybody around it and people from the outside who are not yet familiar with cryptocurrency. And thirdly, it will also make it very hard for the government to shut down crypto, even though I don't really think it's possible, especially for Bitcoin at this point. We're just too far into it, and it sounds a bit funny to me to shut down Bitcoin. However, speaking of the outside interest, there was some more news. Even though we're in a bear market, we're in the accumulation stage, and seemingly, since BlackRock is really accumulating some Bitcoin right now, likely, Nike had some teaser for its Euphoria sneaker NFT on Fortnite. And the last thing I would like to talk about, we're coming back full circle, back to Ethereum. The developers are thinking of changing the maximum balance per validator. At the moment, it is 32 Ethereum, and they are planning to introduce the 2048 Ethereum or 2048 Ethereum per validator. They are saying that this would increase the efficiency of the network and decrease the time to finality within one Ethereum slot. And that kind of makes sense. The more validators you have, the longer it might take for them to achieve and reach consensus. At the moment, Ethereum has 600,000 validators and 90 more thousand are waiting their activation in the queue. So that's a very large number. That's a lot of people. So they are trying to remove the congestion and increase the throughput and efficiency with this kind of move, because they know that some people who have very large banks, they have to spin up multiple validator nodes and then have their Ethereum spread out because they have just so much that they have to have multiple validators. So the increase would mean that one person would be able to have just one validator instead of multiple and have all their big banks of ETH on one validator node. So it seems like delegated staking is going to become more popular, either people coming together to become one validator or people just delegating their tokens to the existing validators to get a portion of the rewards. And that's it. That's all I wanted to talk about in this video. Thank you very much for watching. If you would like to see more kind of news videos, let me know in the comments, and see you in the next one.